everyone, and welcome to today's WSBA Crypto Roundup for September 15th, 2023. I'm Josh Klayman, and I'm here with my co-host, Ron Quaranta. Great to see you, Ron.
Good to see you.
So everyone, we're excited to be here. Just our standard disclaimer, nothing we're about to say is accounting, investment, legal, tax, or any other kind of advice. And with that, I guess we can hop right into it. Ron, what's on your mind?
Josh, good to see you. And I know we talked about it in prep. I should have mentioned it up front. I'm sorry. But David Brill, our other co-host, I think the Gulf Stream's landing someplace. I'm not sure where he is, but he may be joining us later. And for everyone in the audience, again, thanks for being here. Please put any questions that you've got in the chat. You know, Josh, I keep joking about this. I keep trying to put together 4 or 5 bullet points for you and I and David. And right after I send them, it suddenly becomes those were the wrong bullet points. And I think I've really been looking at, and I'd love your opinion on this whole Stoner Cats NFT action, which as a non-attorney struck me as, wow, that's a little bit weird. And also very different from the impact theory NFT action as well. What's like a lawyer's perspective on Stoner Cats?
So a lawyer's perspective, but not legal advice.
Not legal advice.
I guess is well, number one, it's been a no good, very bad week for Mila Kunis.
Yes.
But holding that aside, I mean, it really, to my mind, I go back in my head to what we talked about last week with the dismissal of the case that had been brought against Uniswap,
Right.
Where the judge said, look, the SEC has been behind in this DeFi area. This is a matter for Congress. I mean, I think, to my mind, when I see 2 NFT settlements in a row after the SEC has for a long time been kind of saying things like, oh, you know, NFTs can be securities too, but there's been no there yet until impact theory. It does make me think that they're trying to put in the line in the sand. Who knows who could come next? Certainly, we've seen a lot of folks who've done NFT offerings who've done very well. And given some of the, the political wins that we're seeing, I mean, even certain politicians have. So who knows what's next? But are there specific aspects that you'd like? I mean, certainly we can talk about all of them.
Yeah, and I would love the audience's perspective on this. And I'm still reading through some of the commentary. And again, Commissioner's person Uyeda, had put forward their dissent, which we've all gotten used to. And in my mind, it was a very well worded dissent. And she made this comparison to collectibles. And when you look at some of the other commentary, shout out to Preston Byrne and some of the others, brilliant legal minds like yourself, Josh, that have really commented on this. Like, this is markedly different than the previous NFT action. And it almost became a question of, well, what's next? I think Commissioner Persh referenced Star Wars collectibles. Like, if I took my Star Wars collectible, Josh, and sold it to you and did it through some website, maybe I'm misunderstanding the dynamics. Is that suddenly a security? Is the SEC wading into the world of collectibles, which, for the record, is a large multi-billion-dollar transactional world? How are they looking at collectibles as securities?
It's a really good question. I mean, I think, David's with us. Hey, David.
Hey,
welcome.
Thanks.
David, the Gulf Stream parked just in time. It's good to see you, buddy.
Yeah, even if it did run, getting through the traffic of Manhattan, it would still have been another 45 minutes.
We were just talking, David, thanks for joining us. We just started off with Stoner Cats, and Josh was going to educate me about collectibles and securities and what I should do with my Luke Skywalker doll that's probably stored in the attic someplace.
So it seems like maybe you shouldn't ask for a royalty on it. I don't know. I mean, it's a really good question, but that is one common theme between the impact theory and these Stoner Cats, is that the SEC made a very big deal of this recurring revenue, I guess, income stream for secondary transactions back to the initial creator. What I think is really interesting about, well, there's a lot of things interesting about the Stoner Cats matter, but one of them is, I don't know that I saw this before. Maybe it has been in other things, but I don't think I saw it in impact theory, where they're ordering the destruction of all Stoner Cat NFTs in the respondent's possession. And also that within a certain number of days, as part of this compensation fund payout, which it sounds like is based on $1 million contribution into it. They have to deliver. It says providing the commission with a list of crypto asset wallet holders for Stoner Cats holders within 10 days of the date of this order, and promptly publishing on SC2's website and social media channels upon request by the commission staff a notice of a distribution and or claims process in a form not unacceptable to the commission staff. Now, it's interesting. That harkens back in my mind to Gladius, Aerofox, Paragon, but I don't recall them requiring delivery of the wallet addresses to the SEC in those cases. It was more like post this thing and people can determine whether that they wanted to participate in this fund by providing, information, if I remember correctly, about where they purchased the relevant tokens, like what their loss was, etc. I don't know. Did you guys find that unusual? Or, maybe.
I found it unusual from a, again, not being a lawyer, I keep saying that, but from a product and market perspective, what are they going to do with the wallet addresses? Like, what do they need those for? And I'm not sure it was clear to me. I'll reread it, but I'm not sure if I understood the action and it was clear what they needed it for. But David, did you see that? What were your thoughts?
I'm not as in depth as Josh, but I'm not really a fan of people having to provide wallet addresses, because we've seen in some of the bankruptcy cases that they've been exposed. And, at least there was one, breach in the Celsius case. So I'm not really a fan of that. And I just wonder if this was some other form. I'm not going to call it a security, but let's just say if this was a securities matter, I don't think people would have to give their brokerage accounts. They would just be sort of like omnibus held by different brokers. Like it wouldn't be Josh Klayman's account number 001 and Ron 002 and mine 003. So I'm not really a big fan of that. I think there's probably other ways to solve that problem like they did in some of the other cases. But,
I feel like, David, one of the things that's interesting to me, and to me, I always look at it also from a cybersecurity perspective. And I know it's a little bit off topic, Josh and David, so forgive me, but I feel like every one of these enforcement actions, particularly where it's disclosed this, and now it's disclosed wallet address, is a hacker's like Christmas gift. And, David, you and I have had these conversations looking at bankruptcies, and we know colleagues that to this day are still receiving, get your Voyager claim, click on this link, and with really accurate leaked information. So I always feel like that level of information disclosure, particularly on the part of a regulator or on the instructions of a regulator, is really risky.
Yes, and I think also, when you're dealing with regulators, a lot of the law firms or other professionals, these things are only provided in a very encrypted manner, and sometimes addresses might be provided in one document, and then there's a second document that might have the people who are connected to those addresses. So I know, professionals go to great lengths to sort of keep that information separate and provide it separately. And yeah, it's a challenge, Ron. I don't think that's necessarily helpful.
Cynically, and I don't know if this is the case, so let me just say that right now. But I do wonder, since the total pot, it sounds like is $1 million, right? It's not necessarily that much per wallet holder, I would imagine, although I could be wrong. But it does make me think whether the wallet addresses, could be collected to see whether, there were sanctioned parties involved, or to see whether people properly paid tax. But I don't know.
So the SEC doing the IRS's job for them a little bit in that example.
Again, I totally, these are just thoughts that come to mind. It doesn't mean that's what's happening. It's certainly just something that, why would the structure be different from just have people, if they feel that they've been harmed, that they participate in the claims process.
Are either of you surprised that, I'm assuming Stoner Cats and Mila Kunis and others had legal representation as part of this settlement, that wasn't pushed back on a bit? Like, what's the legal process around, we're going to settle, we'll not admit or deny or guilt, but why the heck do you need this? Is that a conversation that you imagine would have happened? I'm going off script again, Josh. I'm sorry.
Yeah, I don't know what you think, Josh. I think that, a lot of times I think these areas where you're getting like professionals involved and then trying to like take liability to them in some sort is really in the crypto space, I think is more challenging. Like I don't think, like for instance in FTX, I know like, you know, Tom Brady and other people are being sued. But ultimately, if you're going using FTX and buying crypto because Tom Brady suggested you buy it, I mean, at some point, I think you have to take accountability. Like, I would listen to Tom Brady if he was talking about buying what kind of cleats he wears, and I was playing football or cross training sneakers. I would listen. He's a great athlete, but you know, there's this extension of trying to make all these athletes and name people liable beyond, you know, filming commercials and things like that. I'm not talking about the ones who make statements on Twitter and are pumping, you know, things, but just, you know, somebody's in a commercial. Larry David was in a commercial, you know, for FTX. You know, a film commercial that was seen nationwide. Like, should he really be exposed because FTX ended up being, you know, the situation it's in?
Yeah.
It just,
I mean, it is
I
a
know I'm
different.
going on a tangent, but it just,
No,
at
I'm
some
with you.
point, like, you know, there has to be some line drawn.
Look, I'm with you, David. Josh, go ahead. Sorry.
Oh, I was just going to say, you know, the SEC made a big deal, right? They focused on the fact that this was used to fundraise for the show, that the show wasn't yet created, that people said, look, we have the expertise. And the idea was that these stoner cats would become more valuable once the webcast came to be. So I think some aspects of this look like what we've seen before, if you hold aside the fact that these were NFTs. But I think, and this is something where sorry, I'm mixing up everyone's name. Ron, I meant to say, Ron, like what you were saying about, is this, would we have expected them to negotiate this out? It's
Mm.
interesting. I haven't exhaustively looked at all the settlements. But at the beginning of this particular order, it does say, like, in anticipation of the cease and desist proceedings, the respondent made this offer. So now, whether it made a different offer and then it became later through a series of negotiated steps, this, what is before them, I don't know. But it could have been that this was in the initial offer and maybe there was a reason why this they thought would be attractive, but who knows?
Yeah, it's a good point. And I just want to get back to one thing. I would love both of your perspectives on it. You know, Commissioner Perst did a really good job of framing the conversation for my mind, because then from a collectibles perspective, what's off limits? And I just had this ridiculous example. I don't use eBay. I could have a collectible that I bought for X, and David wants to buy it for me on eBay for X times whatever I paid for it, which is a great win for me. Is eBay an exchange in that example? Am I selling something in the anticipation of profit from the efforts of others, and now I'm selling an unregistered security to David? I know that sounds very simplistic, but you can think of situations that would work or apply given the SEC's logic in the Stoner Cats case. And where is the limiting? And I think the phrase was, "What's the limiting factor to any of that?" And I don't know that there is.
I mean, I think that when you look at crypto and sort of blockchain related products like NFTs, I think there's a higher standard being held to how they're marketed than other products. But I think part of it is because, like with crypto, there are financial products, but the NFTs are really, you know, art or some form of art, however you think about it. And, you know, we've said this before, like people buy sports memorabilia. They're a fan, but they also may buy it because they think it appreciates. You know,
Right.
like I have a signed Floyd Mayweather boxing glove. Like I'm a boxing fan. I didn't buy it because I'm trying to flip it someday, but he is going to be in the Hall of Fame, and it probably will appreciate.
Right.
Does that mean like signed memorabilia are suddenly, you know, securities? I mean, I don't think so.
Yeah. Or is fan
I don't think
crowdfunding?
you do either.
Yeah.
But,
Go ahead.
but I didn't buy it from Floyd directly. You know, it was at a charity auction. So there are these different factors. I just think it's very tough. And I don't like the idea that artists in some way could be penalized because, I think we also have to look at how, like, if you look at artists, sometimes they're funded by a gallery and there are these interrelated things. The gallery may have an opening and may do a showing and may get a percentage of the sales for showing that art. I mean, that's another example. And it's a limited edition, only 50 prints. They all sort of getting right there.
So this is why I think, I mean, without knowing, this is why I think the focus on the royalties, I imagine, could be important. Obviously, it hasn't been tested in a court, but many in our industry, including many of our WSBA friends and others, have made really great arguments concerning secondary sales, including how there isn't necessarily a relationship with the issuer. Right? There's no contractual privity, all kinds of other arguments out there. And so with the royalties and the stream still like being programmed into the smart contract to be sending funds back to the initial issuer or whichever initial, it doesn't have to be the issuer, but in this case, it seems to have been.
Yeah.
It does make me wonder whether that's something that they're going to draw out as a potential distinction, because one could argue that there continues to be a relationship even in secondary transactions, just by virtue of, like, David, when you bought the memorabilia, George, like no one received the
royalty.
Yeah, thank you.
Yeah. No, I bought it like from a charity, and so they took payment and they gave it to me. But no, I do think it's challenging, and I agree with the dissent. I think that, look, this is the wave of the future. Like, people can argue whether crypto is the wave of the future, but digitalizing assets and tokenization is the wave of the future. And so I think that going really after some of these, projects, it's difficult because this is really what's going to happen in the future. And, one thing I'll say also is that a lot of artists benefit during the lockdown of being able to create NFTs, being able to show their work on a global scale, whereas, in the past, you'd have to hang them in a gallery and you'd have a limited, amount of attention to it. So there's some real utility that's coming out here. And I think it feels like these are kind of very difficult standards some of the projects are being held to.
And the Chair Gensler has said publicly, look, in my opinion, strictly my opinion, not the opinion of the WSBA, innovation and, the future of markets is not particularly something he's focused on, right? I mean, and we've heard this we don't need digital currencies. We have digital currencies. It's the US dollar and the yen and the euro. But one other thing out of the case that I'm trying to understand, and maybe because in between reading chapters of the Elon Musk book and now waiting for the SBF story to come out, I was reading through the decision, and they mention, that fund, Josh, that you referenced, $1 million for, I'm paraphrasing, harmed parties or aggrieved party. Who was harmed, like in this situation? I literally don't understand, and I don't think any of us do.
Yeah. It's hard to find harm when people are offered rescission. That's
right.
Yeah.
I mean, I feel like they're more harmed by the destruction of the NFTs, given what they wanted to accomplish in purchasing the NFTs. And I know, Larry, you just submitted, Larry Miller, shout out. Thanks for joining us. I would suggest that if it is the SEC that is asserting an enforcement action against anything to do with NFTs, then the three legs of the Howey test must be met. Clearly, with NFTs, the holder does not receive a share in the ownership of the enterprise. Why doesn't that just slam the door on the SEC? Chair Gensler will not allow any doors to be slammed on the SEC. And I know I sound like I'm bashing on Gensler, but Larry Miller, thanks. Good comment. Josh, David, I suspect you agree with Larry's perspective.
So I think it's absolutely right that the Howey test would need to be satisfied, right? And I think here, just if I take the plain my plain meaning read of the SEC's settlement order here, they're trying to say, look, these people who purchased, they were relying on the efforts of the promoter, of the issuer, to create this show, to create this value. And so that's the argument that they're making there, that there was the investment of money in a common enterprise with a reasonable expectation of profit based solely or primarily on the managerial or entrepreneurial efforts of others. In here, it seems to me that the others that they're identifying are the issuer, the same folks who were supposedly going to be, or did, right, did in fact create this web series. So, but yeah, I mean, there are a lot of questions as to why, especially if these are in fact non-fungible. Or the SEC specifically pointed out you didn't get to choose your own, you got a random one. And it seemed to be maybe anticipating arguments for why these things should be treated differently from fungible tokens.
Yeah. Good point. I've got one last thing to. I know we've got other things on the agenda. I don't want to make this a stoner cats conversation for the entirety of our time. But Josh, David, I'd love your perspective as well. Are we now used to the kind of modus operandi of the SEC? Go after these smaller players, get the win to set a precedent, maybe. And David, I'm going to bring this back to the sports conversation you mentioned, and maybe it's my ignorance. Is NBA Top Shots kind of in the view screen for the SEC now? Like, what differentiates them choosing stoner cats versus a bigger project?
Yeah, I don't want to speculate on who's in the crosshairs, but
fair point.
I think that, as we've seen, when you have these bigger crypto enterprises, and these litigations are sort of bet the company litigations, the full force to bear of these companies are going to fight prosecution and litigate. And I think from a bandwidth perspective, there's only so many of those cases the commission can bring. And so I think it is easier to go after less funded projects and get results than to go after the biggest ones simultaneously, because how many can they prosecute at the same time? And I think one thing people also forget, and I want to give credit to like the crypto and blockchain bar, is we have some excellent litigators and advocates for companies in the crypto space, and they are formidable. And so when we do have these litigations, you're seeing some of the really top minds representing these companies and arguing and advocating on their behalfs. And that's a lot to overcome. So I think there's just a finite amount of cases that they can, bring at a large scale. And I guess the last thing I want to say is, remember, the way things are now, if there was a token that was determined to be a security, and there's a settlement based on that token being security, there's really no way to morph those tokens efficiently into something that is traded on any real liquidity. With any real liquidity, you're basically taking those tokens close to zero. So
David,
you're talking about billions of dollars in value.
Josh and I just smiled. We haven't heard the word morph in probably about a month or so, Josh. So, but what did you want to add anything to that, Josh?
I guess what I would add is while it might not have, and it doesn't have the same precedential value as a win in a court, at least if the SEC, if I take the SEC's view for a moment, if it does get something on the scoreboard in some way by saying, yes, here's a settlement, then it has something where it can point to and say, look, we've laid out our reasoning. People are on notice of why these things can be from the SEC view. Let me not say our on this podcast view, that could be securities. And I think, maybe I'm reading too much into it. Totally possible. But even when we look at Gary Gensler's testimony earlier this week, right?
Yep.
He talked about crypto, of course, and he emphasized enforcement actions, but he also called out, frankly, the rule changes, the proposed rule changes, including, and he used the word DeFi, right? That would bring DeFi in scope. I have to wonder, again, we just saw in the Uniswap Labs case that was dismissed, where the judge said, this This is a matter for Congress because the SEC has not sufficiently addressed it. It does make me think that they're trying to figure out a way to have something out there with respect to NFTs so someone can't say, oh, the SEC hasn't addressed this. It's for Congress.
Yeah.
Similarly, and this just briefly, one of the things that came up in the speech, although I know you guys probably have a lot that you want to talk about with this as well, he also covered AI and predictive data analytics.
Right.
And interestingly, Wednesday of this week, there was that historic closed door meeting where reportedly almost 24 leaders of tech companies and other groups, they met with U.S. senators as part of an effort led by the Senate Majority Leader. So, with respect to potentially creating, new AI laws. So, this is another instance, perhaps, where the SEC is trying to say, "Hey, we're here," even as they know that Congress is looking to address these specific technologies.
I feel like I always watch the testimonies like that, Josh, and I go into it with the wrong mindset. I'm always looking to learn or new information, and it's the same old crap, bluntly. It's just more of, the SEC needs more money. Okay, fine, understand that. No position has changed or evolved. And the proponents of crypto are like, why are you doing this? You're really, really terrible. And the opponents of crypto are like, you're a hero. Thank you for saving crypto investors. Nothing changes in those conversations. David, does it bring us back to a conversation the three of us have had many times? Like, it's the court. It's all of us waiting with bated breath for, think Coinbase, think Ripple, for example. Are you seeing it the same way?
Well, I've seen it in action firsthand, when
Yes.
living through Voyager's restructuring and then, watching Celsius and some of the other restructurings. Look, I will say that the judiciary's role really is that kind of checks and balances that our Constitution was formed on, in a way, if you think about it. Ultimately, I think it will be Congress that needs to come up with a framework. And I think that's what's necessary. But look, in fairness, I will say this. If you argue a position and you believe you're right, just because some people tell you you're wrong doesn't mean you're totally going to abdicate that position. And so if, the chair and senior members of the commission feel that they're right and that this is the path it should take, they're not going to be dissuaded by one or two court decisions.
Yeah.
It's really going to take Congress to take action.
Which means nothing's happening, arguably, between now and the election of 2024 and into 2025.
Yeah, but I will make one point that I think it's very important. And I'm not saying people should be a one-issue voter, but if there are people who are really anti the space, and there are other candidates that people think are valuable and maybe are pro the space, this is part of our democratic process. It's an opportunity to look at the candidates and support the ones that you think best represent, your interests. Yep. So we can't lose sight of that, because this is an important part of that process.
Yeah, it's a great point, David. And Josh, we've got other topics. We've only got a few more minutes. I did want to raise one thing, kind of like the light coming through some of the clouds, and I might be over-exaggerating that, Josh and David. Looking at the market's reaction to this, particularly the large TradFis, Franklin Templeton now diving in with a Spot Bitcoin ETF application. We saw the NASDAQ, David, is gearing up to list Spot Bitcoin ETF. So part of me wants to ask, what do they know that we don't know? Or is that just reflective of, look, the truth of the matter is the future will be tokenized, the future will have some engagement with crypto, and the biggest custodians and trust companies and exchanges are getting ready for that future. That is a kind of cause for hope, right, Josh and David?
Josh, I'll let you go. Not let you all.
It's not a legal question, Josh, and I do get that. But from a market perspective, rather, you've got to look at that and think, well, the big trust companies are getting ready for this.
I think nobody wants to be behind the curve, right? So after the recent decision, saying basically that the SEC had acted, that it was arbitrary and capricious for the SEC to deny the application, given the similarities to the futures, I think people are perhaps seeing the approval as inevitable, right?
Right.
Now, obviously, no inside information here
Yep.
either. So who knows for sure? But I think everybody wants to be lined up and doesn't want to be a last mover. I also think that maybe there is psychologically some value in terms of having large established players move in this direction
Right.
to signal to maybe it's some sort of signal to the regulators.
Right. And firms, Josh, who are very comfortable with regulation, they've been regulated entities for decades, very comfortable with the concept of not commingling, very comfortable with the idea of being a true custodian. So I kind of agree with you. David, do you see it the same way?
Look, I think that in the mutual fund world and in the fund world, the commission is used to working with a certain subset of players. They know how they operate. They have a comfort level with them. And so there may be just a institutional, I don't want to say bias is not the right word, just sort of a comfort, like, okay, BlackRock runs so many funds. They're making a filing here. We know how they work. We know how their compliance works. And so I think that that's why you're seeing the big players there. But I think ultimately there's a desire. These companies are seeing their clients want, access to these products, and they want to offer them to their clients. And so ultimately, a business, if they see a need in the marketplace, is going to, try and satisfy that need. So, it doesn't surprise me at all.
Yep. Fair point. We're just about out of time, my friends. I wanted to ask both of you, what will you be doing over the weekend? I know many people in the audience will be celebrating a holiday. Happy holiday. Josh, what are you looking forward to in the next few days? And mainnet's coming up, and there's a lot of people gathering in New York City. What do you focused on in the next few days besides more work?
I mean, other than I will be observing the holiday, but yeah, I mean, I'm going to be catching up on on reading in the space, and yeah, just over the next couple of days until Monday, hopefully I will have caught up on a lot of the reports and other things that have come out that I've skimmed so far, but haven't gone into great detail with. What about you, David? Hopefully more exciting than mine.
So, I'm going to be a little reflective. Today is the 15th anniversary of Lehman failing. So I kind of think about that in our space and how the space has developed. I think the Celsius criminal conviction and that was reported yesterday, the plea deal, and what else is coming to follow in that case is something that I'm certainly following. And will Alex Mashinsky plea to a deal, or what that prosecution looks like, and thinking a little bit more about the Sam Bankman-Fried trial. I think this is going to be my litigator hat weekend, just contemplating how these things may go, and the knock-on effect. Why I mention it is because what kind of selling are we going to see? Galaxy is now empowered to sell tokens on behalf of the FTX estate. And how is that going to work? Is it going to be OTC, or are we going to see selling pressure in a lot of the altcoins? So those are the connected things that I'm thinking about over the weekend, and obviously wishing a good holiday to everybody who celebrates.
So I will not be selling my mint in package R2D2 from 1977. Just in case, like you both, I'll be doing quite a bit of reading, half joking about the Elon Musk book, which is actually an interesting read. There's a Treasury submission that the WSBA is going to be responding to. I believe it's 282 pages. Thanks for that. But look forward to that happening soon. And Josh and David, if I can make a couple of announcements. Next week, on the 20th at 2 p.m. Eastern, I believe, we're bringing back our WSBA crypto policy update. A couple of our colleagues based in Washington, D.C. Again, we are not lobbyists, nor do we employ lobbyists. However, we have some subject matter experts that are in the thick of understanding how the sausage is made and what some of the perspectives are, both from a regulatory actions perspective, as well as what does legislation look like in the future and what are the possibilities of that moving forward. So it'll be interesting to see that next week if you could join us Also, one last thing, David, you and I are working very hard. Josh, we've already added you to a panel. I'm sorry I didn't tell you yet. But on October 23rd, our Crypto Investors Summit live in New York City. There is a limited number of tickets that will be available for public, and we're going to have CLE available for that. Anyone interested in the audience, drop us an email, info@wsba.co. Have a great weekend, everyone. Great to see you all. If we missed any topics, email them over to us. We'll catch up on them next week. We'll leave it there. Thanks for joining us.
Take care, everybody.
Bye-bye.